Hi
everyone.
everyone,
Welcome
welcome
back to
back
Infinity
to
Wealth.
Infinity Wealth. How are we all doing?
Yay! Good
Good?
to have you back. But
Good.
first of all, before we begin with Kiki, those people that were present last night for the IMN meeting, thank you for the lovely comments. It was great to share that experience with you. And please spread the word about the channel. And I hope today you're going to find it as entertaining, as informative as you found it last night. Keep following us. I think, Kiki, you're going to do another video, or we're going to
Yeah,
do
for
another one
sure.
tomorrow about EVs. I'm not sure, but
Yeah,
yeah.
an EV update because we think it's even though we said we'll do a little break from EVs, but I think there's a lot that's happened in the market that we need to talk about. So I think our viewers deserve that at least.
Yeah.
So we would definitely do an update. But yeah, I mean, just referring to last night, attended, it was great. So it was really, if any of you did join. And if you didn't, we pushed out. So next time we are on that sort of talk, Martin's on that talk. Make sure you do join. It was like amazing nuggets you gave out Martin yesterday. So definitely
Yeah.
fantastic,
Yeah.
awesome, sounds good. But yeah, so this is going to be an interesting video that we're going to be doing. So just bearing in
Hold
mind,
on. Does that mean all the other videos are not interesting, mate?
no, that doesn't mean this is more interesting. When the dollars and pounds start trickling in, it gets more. Now I'm joking. No, of course, all of our videos are interesting, not just this one. But
No,
this is
I
going to be
know.
an
I just take the piss.
interesting. So just a disclaimer from me. I've got a webcam issue, so the webcam's in a weird position. So if I'm looking this way, don't be put off. It's just, anyways. So we like I sort of left off in the last video. I was going to do another video of two new stocks, different stocks, looking at a completely different industry away from the EVs, but. This week we're going to focus on gold, and the reason why is because it's been a bit crazy what's happened this week. I'm not too sure, but not even 21 hours or less than 24 hours ago, Rishi Sunak announced yesterday, a big announcement. So we felt the need to talk about gold and the reason why there's any sort of correlations between what Rishi Sunak announced, which we'll talk about in a second, and why we sort of think gold is a good focus. Going forward. So, and also make sure you stay to the end of this video because I'm going to be dropping a secret. So you need to watch to the end in order to get that secret. Yeah.
Ooh, I didn't know about that.
You'll shortly know what it is when I talk about it, but you'll see. But anyways, and it's related to gold, so I'm not surprising you with anything, Martin. So unfortunately this time, but next time definitely. So before we get into it, obviously, guys, remember subscribe to the channel, hit the
Yeah,
bell icon,
please.
smash the like button because the way the algorithm works, the YouTube algorithm works. If you don't smash the like button, you're not going to see our latest videos in your YouTube feed. So make sure you do. Also, we asked last time for your help to get our previous video to 200 views. We got halfway there. We got to about 120, I think, or 115 as I checked today. Now, remember I said I'll be giving away literally a list of stocks that I'm looking into and personally investing in for 2021. So if you want to get your hands on, we're going to do that challenge again for this video. So push, share it to your friends, your family, fellow investors. Give it out. It's a bit of fun. We want you guys to support us to keep this channel going. It's the least we ask of you, just to share it out, and you definitely get that list of stocks.
I'll be doing a list for 2021 as well.
Yes.
As well. So, but not just for next year. What I see going forward in the next 5-10 years with new technology developments going on, and where we're going to be as well.
Exactly. There we go.
Yeah.
So if you want your hands on it, you know what you got to do.
Yeah. You got to earn it like we do. We earn it, right?
You got to earn it. There you go. Cool. So, and obviously the last thing I'm going to say is disclaimer: this video, everything we discuss in this video is not financial advice or legal advice. It's merely our opinions for education and entertainment purposes only. So now all of that is out of the way. Let's get into it. So Martin's going to fill in here, and I'm just going to sort of start with what Rishi Sunak said. So, less than less than 24 hours ago, Rishi Sunak announced that the economic emergency has only just begun. So obviously the money that's been pumped in and everything that's been going on because of the coronavirus. I personally believe the coronavirus spurred on the recession and the crash that we were expecting anyway. It just made things happen a lot faster, obviously. So it was coming anyway, but obviously because of the coronavirus, we've had to spend and borrow ridiculous amounts, which I'm sure you all know about. Just some sort of estimated facts and figures. The economy is apparently expected to shrink by 11.3% this year. Estimated unemployment rate is to rise to around 7.5%, which is the highest level since 2009 crisis. Now, the UK has already borrowed around 350 billion this financial year to pay for the economic relief. And to worsen the wounds, the UK is estimated to borrow at least 100 billion each year for the next 5 years to keep itself and the economy sustained. So now this video we're not going to be talking about how the UK is going to get the debt under control. We're not going to be talking about why, when will governments in the UK and obviously the US, you must have probably seen what they're in trillions. They're not even in billions, they're in trillions. We're not going to be talking about when this absurd government support lending and ridiculous amounts will end, but what this video is going to be about, and literally what we are doing here, me and Marttand are doing here at Infinity Wealth to protect our shiny pounds, and pennies in this case is looking and turning to gold.
Well, actually, in this case, it's not protecting them; it's actually converting them.
Converting, yeah, that's true. Exactly, converting. I agree completely. I stand corrected. So, yeah. So this is what we're going to be talking about gold, and this has been the money, or this has been a year of money printing.
Wow.
It's not only in the UK, as I said, USA as well. Like trillions. I mean, Marttand, you followed this.
Yeah. Do you know what? I think it's going to get even worse. It's going to get worse. They're going to print even more money. Especially in the US with Biden coming in, the Democrats. Yeah, Democrats, and something people have to be mindful of. The stock market does really well under the democratic system, right? Because they do help people more. I'm not politically in any way, but it's more of a case of what's going on. And there's going to be a lot more print. And the other good thing that I'll cover, unless you want me to cover it now, because it is part to do with it. Okay, look, the other big result today was Janet Yellen, Treasury Secretary. Oh my God. Did you see what happened to the stock market, right? So 3 weeks in a row, we've had a booster rocket each week, haven't we? On a Monday, it's the Monday boost, isn't it? The week starting boost. So we had Janet Yellen announced in the US, and this goes in line with what we're talking about now, with gold. Her being made Treasury Secretary, she was the Fed governor before as well. So there is a lot going on that they are definitely going to prop up the market, right? Janet Yellen has been around for a long, long time, and she is an advocate of stimulus, right? So there is no question that her being Treasury Secretary, working with Jay Powell, these guys are hooked together, and they're going to drive more and more currency. Yeah, they're going to print more and more money, which is going to be gold, assets like stock. And I think stocks, and I'll talk about it in my section. But go on. I'm going to give it back to you.
No,
Kiki.
100%. I completely agree, and I think also I want to highlight here, when we say printing, if you don't already know, it's digital numbers being entered into the system. It's not
the printing press.
We haven't got the machines running, printing these billions of dollars. It's literally digits that you print in and overnight, and it costs the UK government. So obviously gold's become a very hot topic, and just to sort of give you an insight on that, huge investors like you might have seen huge investors like Warren Buffett, George Soros, Ray Dalio, Carl Icahn, I think is how you pronounce it.
Carl Icahn.
Icahn. Yeah. So they all seem to be making big bets on gold, and surprisingly, it's surprising though, because this is new, because these investors are notoriously known for being highly against gold in terms of as an investment. They don't really look at gold as an investment. So the reason why that is because gold, give or take, is a boring investment. It doesn't produce cash flow. It doesn't produce income. You buy it, it sits there, it collects dust. It does nothing apart from increase in value if you buy it and sell it well strategically. That is, of course. But obviously, like both of us in the Asian community, it's part of our culture. Gold has always been a sort of thing that people purchase in jewelry, etc., etc. So it's never been looked at really by the mass majority. And again, these bigger investors. But it's interesting to see that these guys are now apparently putting big bets on gold.
Yeah, because I'm just going to add something there, if you don't mind, Kiki. But by owning gold, you can own gold in a number of ways. ETFs, you can do, you can trade it, so you can hold it for a little bit of time as well, and you can hold the physical assets as well. So there's different, and you can hold gold miners as well, right? So gold miners will obviously pay you a dividend. Warren Buffett didn't buy gold itself, but he bought Barrick Gold. Which is a gold miner, so to get some sort of return that way. But the advantage of holding gold is, if you think about central banks around the world before used to hold gold as a reserve, right? And you owning gold, you are becoming your own central bank. Right. And that's the point that I think that people have to remember. A lot of the times people have put money in the bank account. Well, actually, that pounds or dollars or whatever it is that's in the bank, it's actually losing value. Right. It's losing value, and the negative interest rates, if they do arrive, will be charging you money. Whereas you become your own central bank when you hold the gold yourself. Right. So it's a case of you actually looking after your own wealth yourself. Right.
Yeah, exactly. 100%.
So I just wanted to add that. Yeah.
No. That's completely perfect. It's the same way you go. Gold is the same way you go. It's accepted anywhere. Similar to what cryptocurrency is at the moment. One Bitcoin is one Bitcoin everywhere else, right? So obviously that's why a lot of people say Bitcoin is the new gold. It's the same sort of principles that it's built on, the same sort of foundation. It's the same with gold. 1 ounce of gold in UK is the same as anywhere else as 1 ounce of gold everywhere else, right? So it's used as a measure of value, and it's got practical purposes as well. The gold is used in things, so good conductor, just as an example, basically. So the next sort of question is, why we're talking about gold, is usually during, or actually before I go for that, the first one I want to do is coming back to the point of printing the money. Is when money is printed, and not physical, digital, injected into the economy, the value of the pound goes down, and so this makes the price of other things around us go up. So like gold, gold goes up in price. So because the UK and US especially are printing money like ridiculous, they can most probably, never really necessarily pay it back realistically. But because of that, people turn to gold. People are turning to gold. Investors will turn to gold. And there's examples of this. If you look at the gold value and the gold charts, I won't show this. They've got this chart. I'll show you another chart in a second. But in 2009, gold shot up again. Same sort of principles. Recession, it comes. Value of money goes down. People need to put their good hard-earned cash and exchange it for something else. So they go towards gold. Obviously, the difference is now we've got cryptocurrencies in place. So it'll be very interesting to see what happens during this recession. And to be honest, we've almost got this taste for it already, right? We've seen that, compared to gold, the cryptos have been absolutely booming.
Wow.
Yeah. So the question is, are the investors that used to invest in big time, I don't necessarily think most of them, but are they also turning and saying, okay, actually, rather than just gold, let's get a bit of cryptos as well.
Yeah. And I think that's what they're doing. Yeah. Exactly. I think that's exactly what they're doing. Yeah.
It's very,
a lot of the funds in the US have already started investing in Bitcoin. Right? They've already started investing in Bitcoin. And forgotten his name now. What's his name, Kiki? I forgot. It's just, it slips out your head. It's just got out
it slipped out my head.
Drunken Miller. But what's his anyway? He's a great guy. But again, he has started investing a little bit in Bitcoin, and I think most people are holding gold and Bitcoin. But just to add to your thing, before, gold was always considered an inflation hedge before in the past, and also gold was considered as in flights of fear. Gold was the protector, if you like. So if when the stock market was crashing, you'd find gold prices going up, basically, right? Because it was a flight to safety. So it was named, gold was always a flight to safety. Nowadays, that flight to safety, gold is still there, but it's also a protector of wealth. That's where people are beginning to look at it, along with Bitcoin and stuff like that.
Yeah, 100%. No, exactly. That's exactly what it is. And I mean, just like you sort of mentioned, first of all, covering that point. So, it's likely, again, this is not financial advice or investment advice, but it's likely during this time that gold starts going up, especially during a recession. You can look back in history, look at what it's done historically, and the principles that really we're talking about, the reason why these sort of things happen. It's almost bound to happen, basically. So do your research, look into it, look into the chart, see what gold has done in the past, but that could literally be what we're looking at going forward especially into the next year. I think you've covered this already. How do you invest in gold? There is three main ways to buy gold. We'll just elaborate on it a bit more. So number one is obviously physically go and buy it. You can go to the gold jeweler. You can buy physical gold called gold bullion in the form of gold bars, coins, or even jewelry. So that is physically going. Obviously, the cons of that is you have to store it, but it's not that hard. Obviously, you can get banks and safes, etc., 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 that can store it for you. But that's physically going out and buying gold. That's what Warren Buffett hates. He doesn't want to buy stuff that connects dust. He wants things that grow. He'd rather buy the chickens and the hens that they're producing.
The eggs.
Yeah, exactly. Yeah. The second form is paper gold. Obviously, buying gold contract, going into stock market, buying shares of a company owned gold known as ETFs. Examples of this SGLN in the UK, which I think is iMarkets. GLD in USA, IAU. Do you know any more? But these are some sort of ideas.
There's tons. The biggest one, Kiki, is GLD, right?
Yeah, GLD.
The vast majority of people use GLD. Right?
Yeah.
Even the hedge funds, they go into GLD basically.
Yeah, exactly.
So that is the biggest ETF out there.
Yeah, exactly. And then number three is obviously, as Marttand so rightly mentioned, is gold companies, invest in actual gold mining companies. So these are companies that actually go out and mine the gold. They are physically going out and digging up, finding gold and selling it. This is actually the only way Warren Buffett got involved in gold. He actually invested, I don't know if he still does, but he did invest in companies that mine gold as opposed to buying gold directly.
Yeah, it's Barrick Gold.
Yeah,
he bought quite a lot of Barrick Gold shares.
There you go.
Yeah.
But
his timing was a bit off. I think he's he's great at what he does, but his timing was a bit off.
So. That one.
He should have spoken to us before, mate. I'm telling you. He should have spoken to us. Would have told
you. I'm telling you, we're making
Warren, wait until December, mate. Wait, calm your horses.
I'll send this to his Instagram page to make sure he watches it. Anyways, so they're the three ways you can buy. Obviously, gold doesn't go up forever. When the economy starts to recover, the pound regains its value, or whatever currency regains its value, you will start to see the value of gold dropping. You can look at the charts, you will see this. When we had the recovery after the 2009 economic crash, you start to see what happened to gold as well in comparison to what happened just before it when we were going through it. So that is basically really like a nice sort of sum up of gold, what we're looking at. And I'm going to show you the charts for a little bit. We're going to go through the charts, look at the charts of gold. But is there anything else you wanted to add there, Marttand, before we go on?
Yeah, I mean, there was something. It's just slipped out my head, as it does, comes and goes. No, what I was going to say, just going back to gold, right?
Yeah.
Again, obviously being an inflation hedge, but something that people have to realize is that the value of the dollar affects a lot of commodities, right? We talked about trading. We talked about if you get the dollar right, you get commodities right. If you follow, I know people haven't got time, but it is more of a case of what the dollar's doing. If the dollar is actually going down, the price of gold is going up. If the price of dollar is going up, and once again, the yen and the dollar are actually safe haven currencies. So in a panic type market, if the stock market is crashing, what you tend to find is the price of the US dollar starts rising, right? US dollars rising can be detrimental sometimes to the price of gold. Not all the time, but sometimes, the vast majority of times, right? Unless there's a real fear trade, and now it's a case of just piling into gold. So it's not just that; it's understanding the dollar. And just like Kiki, you've said about printing of dollars and pounds, that eventually that's going to devalue the pound, devalue the dollar. But it's devaluing a lot of currencies. The same pound or dollars or yen, whatever you had in your pocket before, is worth a lot less now. And then when you carry the physical aspects of gold, you're actually hedging yourself, and you're behaving like your own central banks. The other thing I know, hopefully, you will see it in your charts. It's in a long-term bull market.
Yeah,
Gold.
exactly.
And any bull market will always have corrections down, right? And it's timing, just having those mindsets saying, yeah, you know what, I'm going to add a bit to it now. So if you're not buying in gold at the moment, perhaps this video is going to help you on determining what price level is good to get back into. Sorry, mate. You bang away at the charts. Let's have a look at the charts.
No, sounds good. Just as long as your timing isn't like Warren Buffett's and Barrett.
Yeah, no. We'll try and help you with that.
Cool. So let's have a look at these great charts. Cool. So, sorry, something came up there. What was this? Share. Oh no, that's fine. Cool. So can you see my screen, Martin?
I can. Yep. I can see
fantastic. It. That means everybody else can. Awesome. So we look at this first on the larger time frame. Excuse all my annotation. Actually, no.
What time frame is that, Kiki?
So now we're looking at this on a monthly now. So we're going to look
monthly.
at this. Monthly.
Okay, excellent. Yeah, excellent.
Let me just get rid of this. Very large. So like what Martin was saying here, in the long term, we're in a bullish.
Well, you can see it's broken out. I mean, one of the things that you can see from this chart, Kiki, you've gone back quite. So it's a long-term chart. You can see that gold is actually broken out, right?
Yeah.
It 100%. Broke out. It's now retesting. It's actually retesting the support level.
Yeah,
right?
Exactly.
So it's broken out of a long-term channel. It's now retesting. So it's in a long-term bull market.
Exactly. So this is
then it's different. It changes dynamics. Yeah.
Yeah, exactly. There you go. So as what Martin mentioned here. So if everybody can see here, so this is around this level that we're speaking about. We come down, we actually push past it, and we're coming back to retest. And like what Martin said there on the second part is if we do end up coming down back into it and then maybe retesting, then we go into bear markets basically, very, very likely. But overall, we can all see this is going up basically. And to be honest, if we go down to week that, this is exactly what I was waiting for. This is my personal sort of analysis of where I personally am looking to maybe top up on what I already have. Is this level? Is this massive retest? It's a huge key at the moment support level, but before resistance level in 2011, where we spiked it, but we could not go past it. Now we finally have this year. So this for me is becoming very apparent that these could be the levels that we can start looking at. Me personally, or you personally. If we go to the daily view, we can see. And this is what I wanted to talk about is since August, between March this year to August, we had a very, very, very strong bull run, and we had a bit of consolidation period before that, but we had an absolutely great bull run. And this thing I wanted to talk about is where we come to the highs of around 2073. So this is in dollars, bearing in mind. 2073, right? And then we've come crashing down. We've finally retested. This is the level, the first level, if you can see, that we retested. And again, if you go back in past, with these key levels, you always want to go back in history to see where these key levels are, where these important levels are. Of course, the one we just highlighted first is the most key one. But on a short-term perspective, again, so this is the daily chart. We're looking at this first key level. As soon as this breaks, we're now looking for the test of the big one, basically. So again, you want to look at these retracements, pullbacks. And again, remember what Martin said. We're not looking to buy anything, whether it's stocks or whatever. What the same principle goes for even trading. If you're looking to go for a buy trade, you're never going to buy at the top. You're going to wait for this retracement, and these are the retracements we're talking about. So we are physically live showing you here what this sort of retracement looks like on a chart. And Martin, actually, just coming back to what you mentioned on the webinar call yesterday, it's a trying to get yourself understanding these charts, looking at these charts. It's so important to be able to look at these charts and know what is happening and what's going on. So now, the secret that I wanted to sort of drop, I think daily is more than enough. We don't need to go really any further sort of down. We sort of know what's happening here on the gold charts. The secret that I wanted to drop, if you allow me to drop this now, Martin. Basically,
Okay.
if, and you must probably know this actually, but I came across this from a fellow friend. If I just delete all this, all my drawings for now, a fellow investor actually, I never knew this before. A fellow investor actually shared this with me, and I'm going to now share it with you guys. It's in December every year, and consistently for the last few years, and I'll show you, we've always had the gold market skyrocketing.
Yep.
So just to prove to you, so let's go back to last year, August, September, October, November, December. So this candlestick is where December started. Boom, absolutely market. Okay.
Okay. Actually, yeah. Kiki, now you've got it a little bit enlarged as well.
Yep.
You can see, so you've got the 20-day EMA in blue, yeah?
Let me just double check actually, because I did change this. This is this is an 8 EMA actually.
It's an eight day.
So okay, so the red one is the 18. Is 18 days.
Right. Okay. Yeah. Right. Okay.
Got it.
Yeah. Okay. So yeah, but what I'm saying is that if you look at the blue line, it's retesting that blue line. It doesn't tend to break the red line. If it does, it then just pips back up. But that's where when we talk about buying points, these are the sort of, so where is that buying point at the moment on the red line? If it was to come down, retrace to that, is it about 1750 or?
Well, no, that is actually quite low though. So it's 16. It's around 1700. 1700. Yeah.
1700. Yeah. Exactly. I mean, when we were talking about buying points, I was saying that if gold breaks the 1800 mark, it's tested it now. It hasn't had a convincing bounce for me. It hasn't. For me, it's not a convincing bounce. I would have expected a far more. And we've still got another day to go in this week. So, normally what you'd find is that it would, where it broke from was 1850. It might bounce back to 1850 before then starting a quick leg down. But 1750 it is a very, very good buy point. So again. Between that 1750, 1760 mark to average in there, because it would have a move like that. You've now shaken out. What you tend to find in things is that there is always a big shakeout. All the weak hands in stocks or in shares, they tend to bail out. Right. You've heard that phrase before, that, and Richard asked last night in the RMN, people always seem to sell at the bottom and they buy at the top. And one of the things is, look, and it's to scare the living daylights out of people. But what you've got to realize is that, hey, it's still available. You're not leveraged. You're just buying it. It's fine. So a lot of people just add to their positions in this sort of situation. And like Kiki has just pointed out, it is in the long-term bull. Gold is a long-term bull, and every bull market has a retracement, and then it moves forward. And like you said quite rightly, in December, January, they're strong months for gold, and February are very strong months. So we're anticipating a strong month for gold.
Exactly. So there are two key points. Recession confirmed ages ago. And Rishi Sunak banging on about how we're just at the beginning of this economic collapse, and then December anyway, which is again good month, strong month. So this is why we wanted to get this video out there for you guys. It's a few days until December. December's next week. In alignment with when all these lockdown rules get lifted. So just for you guys to get prepared, for you to us to share with you this information, this education. Again. Entertainment, not financial advice, for education, entertainment only. So that's basically it. That's what we're looking at. That's what me and Martin, we're always sharing our opinion, what we're doing. Markets, what we're looking at. So we want to share that with you guys all the time. I mean,
the other thing I just wanted to add is that you could always look at GLD, so people can actually bring up the GLD graph, and they could just set a point within the GLD range on where the buy point is for GLD, basically, so they can buy it as an ETF. The other thing that we have said, if people are interested in finding out more about, I mean, the advantage that we have is that Kiki and I both have a platform on our phones, right? So if we see an opportunity, we can always pounce on an opportunity. We're not necessarily there to trade every day, but a lot of people don't have that opportunity. What's that?
So we're not on the screens 24/7.
No. So it's not. So if those people that are interested in finding out more about trading, but what platform is, we're more than happy to recommend you to our brokers and show you the platforms that we use, and we've got it at the ready. And the other way to buy it is that, if gold price was to drop to 1750, you can buy very small amounts, we use leverage accounts as well. So you can buy very small amounts. So it's still protecting you. You're not over leveraged, and then adding to a position,
Exactly.
But if you want to make money, that you can make some serious money, but you've got to play it small first.
Yeah, 100%. You definitely need to know what you're doing. I think on that note, what you mentioned as well in the video yesterday, if there is enough interest and you guys want to know how to do these basic things like reading the charts, you want to know how to buy stocks, you want to know how to analyze stocks, all this kind of stuff, let us know in the comments below, and we will consider doing a course, a good course for you guys, which is valuable. No shit, straight to the point. You know, that
no messing about, no messing about, no upset. It's just, and I think we should do two. I think we should do one for the investor, right? Yeah. Because I mean, a lot of people buy shares, but they just go, they brought up the paper, right? They bring out the paper, they go, oh yeah, shit, yeah, oh, so and so is recommending this, I'll go out and buy it. The first thing I do is actually look at the chart, right? Yeah, exactly. I go, okay, that makes sense. I do like it as a company. I do some more research on the company. That's great. I've decided that I do want to buy the company. The next thing is I look at the chart and I go, okay, where do I want to buy it? And just, because we do property as well, it's to give you an example, in property, you make an offer, right? If the guide price or the offer price is X, everyone always wants a deal. They always offer Y, don't they? And the buyer and seller just meet halfway in the middle. Shares no different, mate. Right, they're not actually no different, right? So we have a little buying point. We say, well, actually, at that point, I'd like to buy it, and that's what we're doing. So we're saying, well, and if we miss the boat, it's fine. There's plenty of other opportunities out there. But unless you have some buy points in there, then you don't. But so we'll do one for investors, and I think we should do one for traders, because it will be slightly more technical for traders, but for investors, it's more of a case of what to look for, the chart, trend, where the support and resistance levels are, helping them to draw trend lines as well. And then we talk about, for the professional trader, we'll talk about, how we trade. So I think maybe we'll do two if people are interested in that. Yeah,
100%. So again, if you're interested, please let us know. We need to actually see how many people are interested in it for us to be worth our time to actually go create the content and then obviously provide it to you guys if you want it.
What do you reckon about doing a live one though, Kiki? What about actually? Yeah. What do you reckon? Where people can answer? I don't know. It'd be quite a lengthy one, wouldn't it? Really.
It would be. That would be the only thing. I think it would be good if we could do an introductory one for sure. We could plan an introductory. Again, if you're interested in something like that, let us know what you're interested in. But I think if it's if people want to know everything, I think it's worth definitely, asking the audience if they want this sort of.
And it won't be much either, because we're not in it for that. We're in it to help you as well to succeed.
Yeah. So let us know.
Okay, very good, Kiki. I like that. I like that. Gold, different.
Hey, different.
Definitely on the ball. Definitely on the ball. What I wanted to talk about, I've already partially talked about it. One of the things that, although if you were in the IMM talk yesterday, you would have heard me say, look, I see huge opportunities in the stock market. I do. But if you talk about the run up that we've had in the last 3 weeks, as investors, what we're looking at, we're not looking to actually we're not momentum traders. So again, you have to separate yourself as an investor, momentum trader, or trader, right? Momentum traders are on their screen every second, right? Because you're following a trend. You're a trend follower, and if it breaks that trend, you've got to sell it, right? But as investors, so what I'm talking about is, you know, the holding it for a little bit length of time as well. It's had a huge run up. The market has had a huge run up. It's unreal what you know, the amount of run up that we've had. I mean, you know, when I talked about these potentials that I'm looking at, you know, long term, I didn't expect, you know, to make 25, 40%, 50% in the stocks literally within 2 weeks. I didn't expect it. I thought that's a good share to tuck away. Wow, blimey.
Yeah.
I didn't expect that, but that's great. So now is the time to actually look at the stocks that you're interested in, and to set little targets in your head saying, well, and you can, again, with the stations that we use, you can get alerts as well. So, you know, if you're interested in that, you get an alert on your phone, say, well, look, this is a hit your buying point, or you can set buying points. But wait for a pullback, because I think a pullback is coming, right? What you tend to find is that, you know, they always talk about this Christmas rally after a dip. And we've had, everything is overbought at the moment. It's overbought, overextended, far too overextended at the moment. And I am expecting a pullback, whether it's a 5% correction, 10% correction. I'm okay with that, because it gives you an opportunity. So if you've heard it yesterday and you are interested in stocks and shares, I'm not allowed to give you advice, but what I would do is not necessarily go out today and buy. What I would go out and look at the shares that you're interested in, research them, look at the chart and say, yeah, okay. And again, reach out to us. We'll try and help you on where we would buy certain stocks, looking at the charts and stuff like that. But again, it's not financial advice. We take our responsibility for ourselves and our own trading, and for you guys just to help you say, well, this is a good buying point. So I'm expecting a pullback. On the positive side, Janet Yellen is there, right? Treasury Secretary. Yeah. Jay Powell is there. What I'm expecting, and I don't know if I'm preempting stuff, right? I did last time. I'm expecting some bad vaccine stuff to occur now, right? And I always swing and I always go, well, I've had a really good run now, so I'm just going to hold off in a minute. I wonder if this will happen. I wonder if there will be some trials, and already AstraZeneca, it's taken a bit of a knocking recently, and I think AstraZeneca is a good buy. Not necessarily now. I'm happy to share this with you guys. If AstraZeneca hits £7, I'm all over it. Right, it's come back 6% this week because AstraZeneca's COVID trial wasn't going to be allowed in the US. Right, so what's happened is that they now have to do a retrial. So they're doing a worldwide trial again, doing it again. So short-termers, traders are short-termers, right? We're investors, we're a little bit long-term, right? We're traders as well, but I've got my investor hat on. And that is, okay, well, you can knock it. You knock it down to my level, I'll be buying it. Because again, AstraZeneca, it's not as if it's not going to produce a COVID vaccine. Yep, it's got some short-term runs against it, but it will come out with a COVID vaccine. So that could be a good way of getting in. I mentioned SmithKline Glaxo as well yesterday. But the other aspect that you have to remember is no one's talked about the side effects. So we've all had bullish runs for the last 3 weeks about, the new vaccine. I'm waiting for a penny to drop, and I'm not preempting things. For the correction, maybe the correction start could be someone saying, well, actually, there's side effects on Moderna's vaccine or whoever's vaccine. And all of a sudden, there's a bit of panic in the market. Shouldn't panic. You should take that as a buying opportunity because you know that they're going to do more quantitative easing. They're going to be pumping more money into the stock market. So I'm anticipating some sort of correction. I don't know if it's a long-term correction. I've got no idea. I haven't got a crystal ball, but I am expecting a correction, and then I'm expecting a Christmas rally towards the end. The other thing I want to talk about, I talked about it yesterday, was Tesla, right? I think we're going to do are we going to do a video tomorrow, you reckon?
Yeah, update. We'll do an update
about EV, so I won't mention it now, right? So you've got to hear our next video. So again, subscribe. and you'll see it tomorrow because Kiki will release a quick one. Whether it will be me or him, I don't know, but it will be one of us. I think it will be you and me, maybe. So that's where it stands at the moment. The other interesting fact is that the week after Thanksgiving, to all my American friends who are maybe watching, happy Thanksgiving. We are thankful for our YouTube channel and for you guys following us and promoting us. So thank you very much. But the week after Thanksgiving, the markets tend to drop, right? Just bear that in mind. The vast majority of times, week after Thanksgiving, there's a little euphoric rise in the stock market. And then there's a little, don't know how big that correction will be, but there will definitely be one. So next week, I'm looking for weakness in the market next week, seeing if it continues. I'm hoping it actually continues for a few more weeks, even though I'm in the stocks. Yeah. But that weakness, I'm looking to add on weakness at the moment. So I am looking to, and it's had a huge run. These things have had a huge run. And I think that's again. They've come out today that you've said it enough. We're going to experience a severe recession, really. And remember, although we experience a severe recession, the stock market is a forward-looking indicator, right? So they are actually 6 months out. If they don't see, if the stock market doesn't anticipate a recovery or as strong as a recovery it's built in, then obviously it will come back to lower levels. But there is underlying support, right? Well, this is one thing that I didn't highlight yesterday. And the reason why I say that people need to be in tune with lots of other opportunities. Do you know what? It's the one industry that there's government bloody support. Right. Kiki, where do you know that the government actually come out and go, I want to prop up the bloody stock market? Right? I want to prop up because that's a feel, people can see it and it's a feel good factor. Well, hang on a minute. What about my property portfolio? Can you prop that up, please? Do you know what I mean? Don't stop texting me. Stop propping up my property portfolio, right? But it's the only one. And that's the other reason, right? When I looked at it, I thought, hold on a minute. There's landlord bashing, but because people have got pensions and everything else, and companies got pensions, and Jay Powell came out, and there is a put. They call it the Jay Powell put under the market. So there is a little bit of a put, and it's somewhere that they won't leave any stone unturned. So even if it has a big drop, they'll somehow come out and prop it up again. Okay. So expect some weakness, which is great. A lot of weakness will be fantastic. Will be absolutely fantastic because we'll be doing another video. I'll be going buy. So that's where it is. I hope you've enjoyed it, guys. But please, like I said, subscribe to the channel, share it, and reach out to us. Like Kiki said, we're here for you guys. We want to, create a community of. We're normal people. Kiki and I are just normal people. Right? Exactly. We understand the markets. We've got a huge depth of knowledge, but at the end of the day, we're not billionaires. We are normal people who've become very successful in doing what we've done, right? And we want to say to you guys is you could do the same. You could follow some of the basic steps that we take in which we increase our wealth and protect our wealth.
Exactly.
Okay. You got any more to add?
Awesome. No, I think that's a wrap. We'll go again. Like, subscribe, subscribe, like. I'm getting it mixed up, mate. Smash the like button. That's how you're going to see our videos, basically.
Actually, I forgot one thing. I forgot one thing about Bitcoin, because Bitcoin had a huge correction today, 11%. And I said to people, because again, it's gone too high, so it was going to correct. It is going to correct. I'm expecting Bitcoin to correct a bit more. It would be nice. Same. It will correct a bit more. So if you are into cryptos, don't panic. Everyone panics. Don't panic. The other thing that I've got to say is that Bitcoin and cryptocurrencies are very volatile. That's their nature. That is their nature. So if you're going to get into that, expect that. Embrace that volatility, because what you want to be doing is buying when it's quite volatile at the bottom.
100%. I
And never
completely
go
agree
full
with
in.
that.
Never go full in.
Completely agree with that. I think that's just sort of end on that is you need to realize the market you're getting into. You know, if you're saving your money in the banks, you've got to realize that you're going to get 1.5% maximum a year. It's slow. If you're going into things like
1.5%,
I don't know, not now.
Oh, wow.
0.5 at the best, I guess. At the
Zero,
most.
mate. Now it's zero.
You know, and if you're getting on the opposite side of the spectrum, cryptos, you have to realize what market you're getting into. These markets are going to shoot up, but they're also going to come shooting down just as fast. So you have to be prepared for that, guys. Don't be, if you're risk adverse, don't get into the completely wrong markets for you. You know, if you can't handle a Lamborghini, don't drive it. Simple. So
Oh, that's a good one. I like that. That's a good one.
I think, yeah. So what does what's his name? Jeremy Clarkson said, and on that bombshell, we'll end that.
Good one.
Cool. So I hope this.
All right. See you next time.
And we'll see you next time, or shortly. Hopefully tomorrow.
Yeah, shortly. Yeah.
And we'll give you an update on the EV markets. But apart from that, catch you
Right.
later.
Take care, guys. Thank you for watching.